commission plus tips plus similar compensation. Add your vacation pay, your FMLA, unless you have gotten a credit against that. So that's family medical leave, medical or sick, and then add in any severance pay. So remember, bonuses and commissions, all of that stuff is included for those periods. In addition to that, you get to add in any group health coverage that you've paid, any retirement contributions that you make as an employer, and of the payroll taxes that you pay, the only ones you can add are state and local employer taxes that are assessed on compensation of employees. You add all that in, and then you have to subtract any wages over than $100,000 for each employee. So again, the math sounded simple, but then you have to go back and look at these payroll costs across the appropriate periods, depending on what your lender is looking for their calculation. Most people, from what I've seen, are using the calendar 12 months of 2019 because that lines up nicely with the way the payroll forms are filed with the federal and state agencies. Okay, so then that takes us to what period are we using for the average payroll? The general rule, if you are a normal business, normal in quotes, the general rule is either the previous 12 months, and that's again 12 months prior to the date the application is filed. So if you're filing right now, then you would have the 12 months ending in March of 2020. So it would be a rolling 12 months, or you can use calendar year 2019, again, at the discretion of the lender. So you need to know what those lender rules are. If you are a seasonal employer, then you can use either of these two dates, February 15th through June 30th, 2019, or March 1st through June 30th, 2019. If you are not in business as of February 15th, of this year, let's see, if you were not in business last year, February 15th to June 30th, then you use the average monthly payroll for this year, 2020, looking at January and February of 2020. Again, confusing, yes, but if you're in one of those situations, those are the rules that you want to follow for figuring out the payroll period. So then the next question is, what are payroll costs if you are self-employed? So again, we have these three boxes that you can check. You can either be a sole proprietor, an independent contractor, or an eligible self-employed individual. If you are a sole proprietor, you can either have employees or not. And so the payroll cost calculation is going to be different depending on which one of those situations apply to you. Okay, so David, so it looks like we have an answer. You want to just share that clarification?
Yeah, so for the SE income partnerships question that came in, sorry, I was incorrect. We do accept those.
Okay. So all the entity type boxes, at least the core ones. You may not be doing 501c3s, but the standard business types, including self-employment, income related entity. Okay.
And so I had a couple other questions.
Okay.